What's up, guys? I appreciate you being here. Today, we're going to go over 3 trade ideas from last week. 2 of them were trades that I was involved in. They were high probability setups on EuroCAD, both in the same direction Tuesday and then Wednesday. The third trade that we're going to go over was a trade that I wasn't involved in, but I still think it has a lot of value because it drives home the point of why we want to avoid those lower probability. We call them C setups. So first, we're going to look at EuroCAD. This was on Tuesday. Monday was a pretty slow trading day. I actually had a very small watch list on Monday to start the week. Coming into Tuesday, the first thing that I saw was this on EuroCAD. So I'm using the TDI here to see that it's trending above the 50 value, but not above the 70 value. So it's in this buying zone that we look for when we want to trade long. On top of that, I'm looking back to yesterday, which was Monday, and I'm seeing yesterday's high, the body high right here, is support that we're holding after breaking above it at 3:30 in the morning here today. So knowing that we're in an uptrend according to the TDI, looking at the EMAs, you can see the 800 is below, then the 200 is white here, the 50 is here. So they're in an uptrend. Seeing that EMA and TDI combo line up, that tells me, okay, we're looking for longs. Then seeing the structure here break, hold for the second time, this is where I start to get interested to see it hold this support level at yesterday's high and come off the 50 EMA to make a move to the upside. ADR was 97 pips or so we had a lot of room to move, which is another reason I liked it. If we quickly just look at the 1-hour chart, if I sync this up so you can see exactly where it is, you can see on the 1 hour, what I like to do is take away the higher time frame EMA. So I drop the 800, the 200, and the 50 just off my chart. If we look at where I was looking to take this long, let's put it in replay mode right before it happens, right? You can see the 8 is above the 21 since yesterday. TDI is coming into the buy zone. So you'd think that this is long biased more than it is short biased. Absolutely. Look at the 4 hour at that time. Same thing. 8 is above the 21. TDI is in the buy zone and has been rising. Look at the daily. Over the last 4 days, it's broken above the 21, and we're starting to see that 8 and 21 cross potentially happen. The only thing here is the daily TDI is in the sell zone. But overall, the 1 hour and 4 hour, 2 of the 3 higher time frames, are long biased. So that plays into the whole idea. Now, let's go back over here. Let's cancel out this replay mode. You can see from the 15-minute where I took my entry, 149.73 was where I got in. That entry actually comes from the 1 minute. So this is a D1 entry. If you've taken our courses, you know exactly what that is. The D1 is more of an entry that we find at pullback points, not at breakout points. So that's why we're trading this off the 50 EMA on the 15-minute. The 50 EMA on the 15-minute is the same thing as the 1 minute 800 EMA, which is the dark blue line here. So now you can see that black dotted line coming across the screen. That's that yesterday's high support level, resistance level, whatever you'd like to call it, key level that we're trading off of. And this is the divergence that gets me interested with this rising RSI here, falling price action at the significant level. That's what gets me interested to see this thing come higher. I really liked how tight the stop loss was when I identified the entry point, because with my stop at 149.65, we're looking at, let's just zoom out here. We're looking at an 8, maybe 9 pip stop, I think at most. Let me drag this back. 8 or 9 pip stop with potential on ADR to see this go 75 pips. So that's incredible risk reward, 9R. Now, it doesn't make the full move to ADR. It only moves about 7R from my risk point. But as you can see, it was pain-free. 15 minutes into the trade, it closes on the 15-minute above the 8 EMA. That's exactly what we'd want to see it do, because the 8 is above the 21. We're trading this D1 in an upshift already. That's what we call it when the 8 is above the 21. So the upshift happened back here at 3:15 on the initial break of yesterday's high, on the initial break of the Asian session high. We're using that as support as we're coming off it for the second time, and that push with the 8 still above the 21 holds the upshift, and then bar by bar you can see it holds outside the 8 EMA. So the way that we manage this trade is we move the stop loss up as the trade moves at R multiples. So I'm taking some of this trade off at 2R, some of it at 3Rs, it's breaking for new highs, and then every 15 minutes I'm checking it. I'm not really watching it in between the candles because I can get distracted and maybe close some of it when I don't need to. Like, look at this bar right here, 830. It was a huge pin down that still ended up closing bullish. So you have to just take it bar by bar and move the stop loss up once you're in a winning trade to mitigate the potential of that turning into a loser. Don't lose money and you're going to survive. I know that sounds simple, but it's very difficult when you're actively trading to say, hey, let me move my stop up and maybe I don't get all of the move, but at least I'm not going to lose money. That's the decision I think a lot of you guys need to switch your mind frame into. So that was the first trade of the week. That was Tuesday. Then that carries into Wednesday. That bias is still there. The TDI is still trending up. It's mostly in the buy zone. Here, we would call this a swapping TDI because it starts in the sell zone and then comes into the buy zone. But overall, you guys know at this point, the higher time frames are trending long. We're holding the 50 EMA again when I wake up. TDI is in the buy zone. So naturally, I'm just going to be long biased, looking to see this make another pop like it did yesterday. And that's exactly what it did. So I took my entry similar to what I did on Tuesday here on Wednesday. The difference was on the 1 minute, we didn't have any divergence on the 50 EMA. So that takes it away from technically being a D1, and it's not an A1 entry either. So this isn't on like an ASFX system edge, but I was able to still use that low at the 15-minute 50 EMA on the 1 minute. If we take it down, you can see right here. Even without divergence, I still had my bias. I had my TDI on the 1 minute pulling into the buy zone, which is what I like to see because I wanted to hold that buy zone. And here, that was the stop level that I liked. If it broke past that low, I knew it could keep moving lower. But at that point, it was such a tight stop loss, it was worth the risk to see it potentially make another pop like it did the day before. The difference also was not only on the 1 minute, but here you can see the pop isn't as big. It only goes about 3.6 R. So it's only about a 40 pip pop, but still you're able to manage this trade candle by candle as it holds the 8 EMA, and you're able to move your stop up and prevent this from turning into a loser, and you take profits at R multiples. So every 10 pips, because I was risking 10, every 10 pips I'm taking some of the trade off. That's how I would manage this one. So those are my 2 trades of the week. Now, I came in on Thursday after winning those 2 trades, and I thought I had a good idea on GBP CHF. The idea on the 1 hour looked like this. I'm going to throw it into replay mode. You can see it here. Coming off the 21 EMA, headed towards the 800 and the 200 above it, TDI in the buy zone with a stop level at 127.13. So this was the idea that I was looking for. The reason I didn't get in this trade, I'll explain it to you on a couple of different time frames, but on this simple level is that this is still technically counter trend. If you're trying to buy it against the 200 and the 800 EMA, that's technically counter trend. However, I just showed you on the previous trade that on the higher time frames, I'm normally not looking at these EMAs. But when I went to the 15-minute, this is where I got a little concerned with this trade. On the 15-minute, you can see it. From the start of the Asian session here to the end of the Asian session, even into the London session, it is very choppy with a lot of pins. What else I saw was on the 15-minute, because I still use those EMAs, the 800 EMA was still on top. So the fact that the 800 is on top on the 15-minute still tells me, even on a shorter term now, time frame, it is in a downtrend overall. So you could make some money to the upside. Absolutely. We have counter trend trades, markups of winners and losers. But after having 2 wins already this week, is this lower probability setup counter trend something that you really want to risk money on? That's what you have to ask yourself. And maybe, I've been talking to a lot of guys about this, you should just take this trade on a demo account. If you got to scratch the itch of trading, take it on a demo account because it is a lower probability trade. It's lower probability not just because it's counter trend, but because here on the 15-minute, you can see this bearish divergence from yesterday still holding strong. So you have the divergence there, which sets the top here. So I'm not so much using today's high, I'm using yesterday's high, where it first came to this price zone as the resistance level. And you can see it has not broken past that resistance. So to go long before we've broken above that is very foolish, because you know it could hold that and come off of it. And that's exactly what it did. If I take it off replay mode, you'll see. It pops for a quick second and then falls the rest of the day into Friday. Now Friday, it makes a decent size reversal and ends up coming higher. But as you can see, the move was actually down overall and into the afternoon and then into the evening because the trend was down. So those were the 3 ideas that I was most focused on this week. We've seen some good movement. If we look over to Ripple, I know we talked about this last weekend. We've seen some good movement over the last couple of days. Sitting on the 8 EMA today, I'd expect some bullish movement over the weekend as we head towards $2 again. That's what I'm going to keep my eye on. You guys know I'm a kind of like a holder when it comes to Ripple, especially now that we've seen it break past this SEC bullshit You know, this is some serious strength. So we'll see what happens. Unfortunately, I'm not holding any Dogecoin right now, just Bitcoin and just Ripple. So those are the two that I'm watching the most. Other than that, CLOV, there's some talk that there's a short squeeze happening here. I've been buying this since it was at like $9, $10 back in February, but we have a clear base at $7. So as long as it's above 7, I think this could be something we see a little pop in. Now, if it pops to $20, $40, $50 because of a short squeeze, I'm not holding through that. I'm going to take some decent profits and I'm going to get out of the chaos, just because you guys know that's the way that I like to trade. I look for more stability. Short squeezes are not normally my specialty. So if it does happen, I'm going to be the first one out the door. There's a movie, Margin Call, I just watched recently. It's an old movie about basically like a story about 2008 and the financial crisis. And the guy says, I'd rather be first, fast, or something like that. He's got these 3 things, and one of them is he'd rather be the first one out the door when chaos happens. So that's kind of what I'm saying here is my approach. So I hope this video helps, gives you guys a little bit of insight into some crypto stuff, some stock stuff, but we talked about the 3-4x things that were on my plate the most. We talked about the C setup, why it's important to avoid that trade, maybe even taking it on a demo account, and then of course, we talked about the 2 EuroCAD trades back to back. That's the stuff that I'm looking for. D1, A1 entry signals in trend, same direction, even in the same pair. Even if I trade EuroCAD long Tuesday, I'll trade Euro USD long on Wednesday. If it's that same Euro bias, why not? But normally, if it's the same pair, you can have even more confidence in it because these pairs trend. So we can go back to back. It makes it a little bit easier to trade. So I hope it, like I said, gives you guys some insight. If it does, give me a thumbs up. Make sure you're subscribed. I hope you had a good week. I was busy with my dad last week, showing him around St. Pete. Hopefully, he's going to be moving down here. So next week, we're back at it, full force. Expect a couple of videos, and we'll have a good trading week. Thanks, everybody. I'll see you in the next video.